XRP isn't a security, declares former CFTC chairman. The CFTC chairman also now has a position at Ripple. So, can we trust what he says? Well, obviously he has a company he's backing, he works there now, but nonetheless, he is claiming that XRP is not a security, and he gives some pretty good reasoning into it. So we're going to go over this today. I also want to show you guys some bullish news on Ethereum. So Ethereum addresses with more than 0.1 ETH are at an all-time high. And I also want to show you guys, let's connect the dots a little bit. Remember, GrayScale is bought half of all the Ethereum mined in 2020. And also keep in mind that GrayScale is also selling Ethereum at a very premium price that we'll get into. But we are buying Ethereum for so much cheaper than people buying it through GrayScale are. With that said, if you guys could like the video, that would be amazing. It helped me push it out to more people. And we're going to start here. There's a lot to unpack in this article, but I'm trying to give it to you guys in a really understandable way without really going over anything. We're just going to go over the important stuff. So, when Chris Giancarlo was the chairman of the Commodity Futures Trading Commission, he became a rock star of sorts in certain corners of the cryptocurrency community, helping establish criteria that eventually led to Bitcoin and ETH being declared commodities. The U.S. Securities and Exchange Commission largely followed suit, eventually also declaring that Bitcoin and Ether, the cryptocurrency powering the Ethereum blockchain, weren't securities. So keep in mind, guys, this guy kind of helped to shape the way people are viewing Bitcoin and Ethereum, that they're not securities. Now Chairman Giancarlo, who was deemed a crypto dad, quote unquote, following an impassioned speech he gave to Congress where he created Bitcoin for finally getting his kids interested in finance, is at it again, having co-written a detailed argument published this morning in the International Financial Law Review for why XRP, the cryptocurrency formerly known as Ripples, was also not a security. The only problem is he's no longer a regulator. In fact, he's on the payroll of Ripple, the largest single owner of XRP, whose co-founders actually created the cryptocurrency. The bombshell paper titled Cryptocurrencies and U.S. Security Laws Beyond Bitcoin and Ether methodically reviews the criteria of the Howey test, established by the SEC in 1946 to determine whether something is a security, and point by point argues that XRP does not qualify. Rather, the paper argues, like its name would indicate, cryptocurrency is a currency of perhaps more interest to the Federal Reserve and central banks than securities regulators. So basically, guys, the SEC has a test to see if things are securities. This is called the Howey test, and basically what he did was he took the Howey test and took XRP and went to go and research whether or not XRP was a security according to the Howey test, and basically goes on to say that he found that it wasn't. It does not meet any of the criteria. So not only could an eventual decision by the SEC to classify or to not classify XRP as a security impact the untold individual owners of the cryptocurrency, but other clients using Ripple services that don't rely on the cryptocurrency, including American Express, Santander, and SBI Holdings, could stand to be impacted positively or negatively depending on the decision. After all, if XRP would be rescinded, it would be a huge cost to their software provider. If Giancarlo is right, though, Ripple could end up being one of the most valuable startups in fintech, one of the most valuable. And guys, remember Coinbase has listed XRP. The lawsuits are getting nowhere with whether or not they are a security. That one lawsuit they have from the guy who bought the top is a complete joke. I don't even know why that thing hasn't been thrown out the window yet. But I think it's pretty fair to say it's pretty obvious that XRP is not a security. We're really just waiting for the officials to come out and declare it. So he says, ultimately, under a fair application of the Howey test and the SEC's presently expanding analysis, XRP should not be regulated as a security, but instead considered a currency or a medium of exchange. Giancarlo Mbalki argues in the paper the increased adoption of XRP as a medium of exchange in a form of payment in recent years, both by consumers and in the business-to-business setting, further underscores the utility of XRP as a bona fide fiat substitute. So that's kind of interesting, guys. Basically saying XRP is a fiat substitute, but we also know that XRP isn't fiat. So is this calling for the replacement of fiat with XRP? That'd be really interesting, since one of the things that XRP could possibly be is like an SDR, like a global reserve currency, and they're coming out and saying this now. In 2015, he helped lead the thinking behind the CFTC's decision that Bitcoin and other cryptos were commodities, paving the way for the SEC-related comments that neither Bitcoin nor Ethereum are securities. At the height of the 2017 crypto bubble, President Trump nominated him to be chairman of the CFTC, where he oversaw the creation of a number of Bitcoin futures projects, including at CME Group and the short-lived effort at SIBO. So remember, guys, this guy helped shape the SEC and how they view cryptos. He got Bitcoin and Ethereum to not be viewed as securities. So if he could do it for Bitcoin and Ethereum, and this guy is now saying that XRP is not, it's good news. In November, he joined as an advisor to American Financial Exchange, using Ethereum to create a Liber alternative. The following April, he co-founded the Digital Dollar Project, leading the push to use blockchain at the Federal Reserve, and now it would seem he's hoping to influence the classification of XRP as he did for Bitcoin and Ethereum. So this guy is pushing for the Digital Dollar Project, and he has connections at the Federal Reserve, and he's bullish on XRP. But from the other side of regulation, importantly, however, a footnote in the report discloses that not only is Giancarlo and Balki's firm, Wilkie Farr and Gallagher LLP, counsel to Ripple Labs, but they relied on certain factual information provided by Ripple in the preparation of this article. While it's impossible to parse what information came from the co-authors and what came from Ripple, the resulting legal argument is fascinating, even if it does leave room for doubt. I don't even know why we're arguing this anymore. Someone needs to just come out and announce that XRP isn't a security. They're basically just leaving us all hanging at this point. Then I also wanted to show you guys this. So he says, even if XRP were to satisfy one or two of the prongs of the Howey test, and basically the prongs of the Howey test are, you know, something that would deem XRP a security. So you could have like prong 1 or 0.1, a prong 2 or 0.2. It's basically what it is. The prongs are like, you know, what classifies. So even if XRP were to satisfy one or two of the prongs, so if it fell in line with one or two of the things that deem it a security, it does not satisfy all three factors, such that XRP is an investment contract subject to regulation as a security. So even if it falls for one or two, it doesn't really matter, because it doesn't fall for all of them. It can't be deemed a security. It needs to be able to fall under a certain number of prongs, and even if it did, and they're not even saying it did, but even if it did, it still wouldn't be deemed security. So guys, that is really good. The rest of this stuff is, you know, mainly the history of Ripple, and they talk about the company before Ripple who actually made XRP, and it was called the Ripple. So if you guys want more on that, this is on Forbes. Go ahead and check it out. With that said, we'll go over a couple prices today. I won't go down through everything, but Bitcoin's at 9,300, Ethereum's at 231, XRP is at 19 cents, 8 cent Cardano, 44 Litecoin, and a 403 Chainlink. So that's our prices for today. Again, it's a really boring day, guys. Everything's sideways. Our fear and greed index is at 38, so still sideways. Like I said, we're basically looking for a break up through resistance, or we're looking to retrace back down to support. Whatever happens, happens, but one of those two are going to happen, because we can't keep going sideways forever. If you guys like daily cryptocurrency news, make sure you go ahead and subscribe to the channel. And if you're enjoying this video so far, drop it a like. It'll help me reach more people. I am a new channel. We're less than a month old, and I'm trying to grow this, trying to build a huge digital investor community. So any support you choose to give is greatly appreciated. With that said, let's get into this bullish Ethereum news. So ETH addresses with more than 0.1 ETH are at an all-time high. Ethereum's popularity continues to grow among investors as the number of EOA addresses holding at least 0.1 ETH recently recorded an all-time high by surpassing the 3 million mark. So more than 3 million people own 0.1 Ethereum. The cryptocurrency analytics company Glassnode displayed the data regarding the number of ETH addresses containing at least 0.1. According to the info, such addresses have spiked since the start of the year by 10.9%. Hence, they have just quote-unquote just crossed the 3 million mark for the first time. It's worth noting that this applies only to externally owned accounts. So guys, here we can see price action is this black line, and it's price action against Ethereum addresses going up with 0.1 ETH. So as we can see, it's trending up. The graph above demonstrates that the most significant surge of such addresses came from mid-2017 to early 2018, skyrocketing from below 500K to around 2.5 million. During that period, Ethereum was becoming especially popular among cryptocurrency investors because of the ICO boom. Another compelling correlation occurred at the time between the rapid increase of Ethereum addresses with balances of at least 0.1 ETH and the asset price. During the parabolic price increase of late 17 and early 18, and amid the growth of such addresses, Ethereum reached its all-time high of approximately $1,400. Interestingly, despite its price falling substantially since then, the number of these addresses remained relatively stable for a few years before beginning to increase again in 2020. And as we can see, it really did. Once the price boomed up, everybody got in, and now people just have this hodl mindset. So people are hodling, and if people are hodling and they're not selling, and we've already bottomed out on price, and more people are buying and holding Ethereum, and now let's get into this, right? GrayScale is buying half of all Ethereum mined in 2020. That's just the GrayScale. Price is going to go up, guys. It's simple supply and demand. If more Ethereum is being bought up than sold, the more people are holding it, 2.0 drops, and then people are staking it. Because, guys, remember, staking a coin incentivizes the holders to hold the coin. And if coin's being held, it's not being sold. So the price is going to increase. The leading digital asset manager company, GrayScale Investments, has purchased nearly 50% of all mined ethers in 2020. 50% of all mined Ethereum, guys. Just think about that and realize how massive of a number that is. Realize look how GrayScale is setting themselves up. Why would they set themselves up like this? Why are they buying so much? What do they see coming that other people aren't seeing? New information on the matter indicated that the total number of ETHs mined from the start of 2020 to April 24th was 1.5 billion. Yes, 1.5. It's 1.5 million. Sorry, guys. That was a period, not a comma. A little hard to read. So 1.5 million. At the same time, the GrayScale Investments Ethereum Trust had issued 5.2 million shares as of December 31st last year. And per their website, the firm had 13 million shares as of April 24th. During Q1 2020, the Ethereum Trust saw 110 million of inflows, which is more than all previous inflows combined for the last 2 years. So in 2 years, 2018 and 2019, total inflows 95 million, but total inflows for just quarter one of 2020. So they did in 3 to 4 months, 110 million. Whereas for the past 2 years, they did 95. Again, guys, what do they see coming? Why are they putting their money where their mouth is? Why are they setting themselves up for this? What are they setting themselves up for? Is it a bull run? In the annual document on Ethereum's developments, GrayScale explicitly introduced and explained the new concept, saying that one of the benefits will be increasing the scalability of the database. Ethereum investors buying through GrayScale, listen to this, guys. So buying through GrayScale are not slowing down. So the sales through GrayScale are not slowing down, and get this, despite a significant premium of about 420%. So Ethereum is selling for a 420% premium if you're buying through GrayScale. As of April 24th, one share of ETH costs $92 to buy. So that's spot price. That's what we get it on at the market, right? So when you go to, say, Coinbase Pro, at that specific time on April 24th, you'd be able to buy it for 92, while the holdings per share were worth just $17.70. In other words, institutions are happily paying a major premium as they don't have to worry about storing, transferring, and managing the cryptocurrency on their own. I think they have the comma messed up on this. I think this is supposed to be 1,770. That would be accurate in terms of 420% increase. And I think it says it here. So the spot price of the asset, on the other hand, has gained approximately 50% since the start of the year. ETH entered the new century at 130 and is currently trading at 195. The turbulence in the cryptocurrency market reached it as well, as Ethereum hit a yearly high of 290 in February before plunging to 87 during the panic sell-offs in mid-March. So guys, right now, if you go and actually look up a recent article of what Ethereum is trading for through GrayScale, and right now it's about $2,000 with current price and everything like that. Ethereum is being traded for about $2,000. When Ethereum was at 96, we just read it was being sold for, guys, I really think this is supposed to be 1,700. It's got to be messed up. So guys, I just paused the video and re-brought it back just to pull up this article. So Ethereum is sold for over 2,000 on GrayScale's trust, 750% premium on ETH current market price. So right now, me and you can pick up an Ethereum for 231, but there are other people willing to pay between $1,700 to $2,000 for an Ethereum. Now, if you're willing to pay $2,000 for an Ethereum, you must be very, 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 very confident buying at such a ridiculous premium that you're still going to make money. Like if you're going to buy at a 700% premium, you have to really know that this asset class is just going to take off. I mean, otherwise, it doesn't make any sense at all. So that's the news for today, guys. XRP isn't a security, and Ethereum looks like it's going to be set up for some gnarly gains. With that said, if you guys enjoyed this video, please go ahead and drop it a like. It helps me push it to more people to grow the channel. And if you're still around, hey, you might as well subscribe. I produce a video like this daily. Sometimes I put out 2 videos a day. Today I'm kind of busy though, so I'm probably only going to be able to get out this one. But with all that said, I hope you guys are having a great day, and I just want to thank you all for your support. Your support has been amazing. So with that said, I'll see you all tomorrow on the next video.